seasonally adjusted Kagiso PMI, that's the Purchasing Managers Index here in South Africa, increased by 1.7 index points to reach 52.4 in November. This brings the average for the first 2 months of this quarter to 51.6. The improvement in the PMI was broad-based and points to improving conditions in manufacturing. Abdul Davids, Head of Research at Kagiso Asset Management, joins us now. Abdul, I guess the important thing is that if you're above 50, it means people are optimistic.
Yes, that's right, Alec. What we have seen is that for the last couple of months, the PMI has hovered around the 50 level, and with this move, slightly above 50 as well in November.
And how do you guys feel? You're not the only Purchasing Managers Index that is available today. It's rather strange. We didn't have one for a long time, and now we have two.
That's right. I can't comment on the other, which is I think the HSBC one. I think there are some differences. Clearly, we do a manufacturing-only survey with purchasing managers that are affiliated to SIPs. And I think the HSBC one is slightly different in that they look at a total economy PMI, which incorporates other sectors as well.
So we should actually take both of them into account?
I think so. I think it's been common practice in Europe and in China, for example, where you see two PMI numbers being released. It will take some time probably in the domestic market, but I think there will be general acceptance of the two. And I think what it does do is it gives you probably a much better picture of the overall health of the South African economy, and not just the manufacturing sector as well.
Now, there were some reasons why we saw a slight uptick, not least we're doing well exporting into Africa.
We think so. I think what we also have seen is that clearly the previous couple of months, maybe starting in July, we saw some influence of the strike season impacting in terms of the manufacturing sector. In July in particular, we saw, we believe, some pre-buying and pre-activity. And then obviously the significant slowdowns that we've seen in the September and October periods as well. With a lot of the strikes now having come to completion, we were due for a rebound, and that is borne out by the GDP contribution as well, where we saw quite a significant drop-off in the third quarter contribution from manufacturing, and we do expect a rebound in terms of manufacturing's contribution to GDP in the fourth quarter of this year.
So where do you think the GDP number could end?
Well, it's difficult to say because obviously there's a whole host of factors that goes into it. There's a delayed impact in some of the results that we've seen. But given the magnitude of the drop-off that we saw in the third quarter, I think we are due for quite a decent rebound in the fourth quarter as well.
Well, that's good news indeed. And then, of course, we've got Christmas just around the corner. Does that make much difference, do you think, to the way that manufacturers are viewing the world?
Not necessarily. Bearing in mind the index is seasonally adjusted, so we have Christmas every year. To an extent. But I think what has happened is that unfortunately, especially in the mining sector and the platinum sector, there is still significant strike activity and talks of strike activity. I think some of the unions have delayed some of the strike action to next year. But bearing in mind that last year was quite a weak base as well, with the events of Marikana effectively dominating and carrying through until about January this year. So I would think that with that weaker base, we should see a decent performance coming through in the next couple of months as well.
Just be careful what you say on live television, Abdul. We do have Christmas every year, not to a certain extent. But I suppose that's, one does look at the seasonally adjustment in context. And maybe you can give us some context from a historical perspective. Where are we at the moment relative to where we were kind of in the depths of the last downturn and the previous peaks?
That's a very good question because one, you really need to look at the trend in terms of our PMI and probably over a much longer period. I think if you go back to the impact of the global financial crisis almost 5 years ago, we've actually recovered quite nicely. And there was a period where we actually disconnected from many of our leading trading partners, and we did particularly well for a period. And then clearly domestic issues impacted our local performance. Unfortunately, a lot of those domestic issues were strike related, so labor related in terms of their nature. And to an extent, a lot of that has been softened a bit by the weakness of the currency. So to an extent, if one looks at the PMIs released today across Europe, for example, the China PMI, they saw almost in line with our local PMI in terms of the absolute number. So we have rebounded a bit from the lows that we saw very recently. But I do still think that we have some structural issues in our local economy that translates into us not realizing our full potential in terms of the manufacturing sector as well.
So how do we apply all of this knowledge that you've shared with us today to an investment portfolio? You're with an asset management company.
I'm sorry, I didn't get the last bit.
How do we apply this knowledge that you've shared with us today to our investment portfolios? Do we buy more? Do we stay with the Satrix? Do we stay with the Johannesburg Stock Exchange with local shares?
Well, that's a very difficult question to answer because there isn't a direct relationship between our stock market and the manufacturing sector in particular. If one looks at the listed manufacturing businesses, there are actually very few, especially South African-focused manufacturers. And bearing in mind that our stock market is hitting all-time highs and have been at quite a decent bull market, especially coming out of the global financial crisis. Clearly what that is telling you is that a lot of our businesses and companies are doing very well. Most notably companies that have actually got a global flavor to them. So the big multinationals, SAB, BTI, even the likes of MTN and Naspers that doesn't really, first of all, they're not manufacturers. And then secondly, I think they've got very little exposure to South Africa. So there's a clear disparity or almost a dichotomy between the stock market, the local stock market, and then the local economy and the manufacturing sector as well.
Abdul, you do look after research for the asset management company. You're also part of Kagiso. Just a small point, you would have seen the delisting of Kagiso Media recently, and you would no doubt have seen the deal on Element 1, where Rembrandt, who are influential, shall we say, at Kagiso, are now going to be influential at Caxton as well. Can we join the dots there?
It's very difficult for me to comment because I haven't been privy to any information around that. But what I can say is that I think the Caxton transaction in particular has probably been prompted by the fact that Element 1 was due to unbundle the Caxton stake. I think they announced that on the 4th of November. So in a way, this transaction is a way to obviously or potentially prevent that from happening. Having said that, I think it is surprising to see Remgro's hand in all of this. I don't think that there's currently a relationship, or not one that I know of, between Remgro and Caxton. And I think the Caxton business is, bearing in mind that they do have a stake in Times Media Group, for example, is fairly different and very different to, say, a Kagiso Media and even a Sabido, which owns ETV, that Remgro currently has a stake in. So I find it a bit surprising that they would go from that into a print media business where there are no clear and obvious synergies potentially between the two businesses. And then secondly, I think if one looks at the impact of this transaction, clearly Terry Moorman will entrench his control. So there isn't a change of control in favor of Remgro potentially after all of the transactions has been implemented. So again, I find it very difficult to see the rationale behind Remgro's involvement.
That was Abdul Davids, Head of Research at Kagiso Asset Management.